the Fed left the rate unchanged at 5.25% per annum. The U.S. Federal Reserve kept the discount rate at 5.25% per annum. The last time the American central bank rates raised was in the summer of 2023. Most experts expect the Federal Reserve to begin cutting rates in the second quarter of this year. Following the meeting on January 30th to 31st, the Federal Reserve System left the discount rate unchanged, keeping it at the level of 5.5% per annum. This is stated in the regulator's message. The rate has remained at this level since July 2023. Maintaining the rate of 5.5% at the first meeting of the Fed this year was expected. On the evening of January 31st, the market estimated the probability of such a scenario at 95.9%, according to data from the FedWatch tool, which is calculated by the CME exchange based on rate futures. Traders estimated the probability of a rate cut by 25 BP to 5.25% at only 4.1%. In a message following the meeting, the Fed noted that recent economic indicators indicate that economic activity is increasing at a strong pace. The December 2023 release reported that growth in economic activity had slowed from the strong pace in the third quarter of 2023. Job growth has slowed since early last year but remains strong, and the unemployment rate remains low. Inflation has decreased over the past year but remains high, the release said. In the December message, the regulator also noted that inflation has decreased over the past year but remains high. The Fed reaffirmed its intention to return inflation to the target of 2% and stated its readiness to adjust its policy if risks arise in achieving this goal. When making decisions, the regulator will take into account incoming data, its message says. Committee Federal Open Market Committee of the Federal Reserve System RBC Investments does not expect that it will be appropriate to reduce the target range until it has greater confidence that inflation is sustainably approaching 2%, the Fed said in a statement. The stock market reacted to the results of the meeting with a decline. As of 22:02 Moscow time, the S&P 500 lost 1.06% to 4,872.82 points. All economists surveyed by Reuters between January 16 and 23 believe that the tightening cycle is over and the Fed will begin cutting rates this year. The majority, 86 out of 123 respondents, believe that the decline will begin in the second quarter. Of these, almost 45%, or 55 economists, spoke about the beginning of June and 31 about May. Only 16 respondents admit a decline already in March. Others predict that the Fed will begin cutting rates in response to cooling inflation only in the second half of the year. According to Veles Capital analyst Elena Kozakova, hopes remain in the United States for a reduction in interest rates this year, although expectations for the first easing of Fed policy due to another acceleration in inflation have already shifted from March to May. According to Finam Financial Group analyst Igor Dodonov, official January employment data in the United States will be published at the end of the week, which could have a significant impact on future decisions of the Federal Reserve. The Wall Street Journal wrote on January 28 that the Fed will not cut rates at its January 30th to 31st meeting because the economy is growing steadily. As it becomes increasingly likely that the U.S. economy will avoid a recession, there is no reason to cut interest rates early, economists polled by Reuters said. According to the Wall Street Journal, despite the fact that the average monthly inflation excluding food and energy for 6 months was at 2% or below, the Fed wants to be sure that it will be sustainable before cutting rates. Countering the imminent rate cut is falling bond yields and rising stocks, which could spur economic activity and consumer spending. Former Fed senior economist and Yale School of Management professor William English, in a conversation with the Wall Street Journal, suggested that for this reason the regulator could wait until May or even longer and only then cut the rate. On the other hand, if they get really encouraging inflation data and the real economy slows a little, they could comfortably cut rates in March, he said. The next Fed meeting will take place on March 19 to 20, 2024. The market expects the regulator to cut the rate by 25 BP with a 54.1% probability. The probability that the rate will remain at the current level is estimated at 43.6% and a reduction of 50 BP at 2.3%. The Fed began raising rates in March 2022. By May 2023, the rate increased from the near-zero level to 5.25%. At a meeting in June 2023, the regulator paused, warning that it was not yet finished with the increase. In July, the Federal Reserve raised the rate by another 25 BP to 5.5%, which was the highest since the beginning of 2001. In September, November and December, the Fed kept the rate at 5.25%.